Hey guys, welcome back to Exploring Park City Living, and we're going to get into the real estate market update of Q2 2024. And I have the 10-year treasury pulled up because the mortgage rates follow the 10-year. And as you can see, the past week, the rates have dropped considerably. And this is due to, give me a second, I have to pull it up. This is due to the Federal Reserve's meeting. So Fed holds rates at the last meeting steady, but hints at upcoming cuts. So, as expected, the Federal Reserve kept the target range of the federal funds rate at 2.25 to 2.5 at the July meeting, but opened the door to cutting rates in the upcoming meeting. The decision to leave the policy unchanged was unanimous. Even though he definitely hinted at it not being unanimous, he hinted at some people wanting to cut early. So it's weird that they have this in there because I watched it live. But this meeting was not accompanied by an updated summary of economic projections. So the dot plot, sometimes they don't cut rates, but they change the dot plot, their forecast to see how markets would react. This time they didn't. So I believe that's why Powell at the supported the expectation of a rate cut is likely coming in September. And I'm pretty sure this is verbatim of what he said. The time to cut is getting close. So he was definitely putting out the feelers there verbally. And as you can see, the bond market already priced in a Fed cut in September, over 100%. That's almost like pricing in a 50 basis point cut. But yeah, so mortgage rates plunged to the 15-month low. 30-year average is the cheapest level since April 2023. The last 90 days of the 40-year or 30-year mortgage rate average here. This graph kind of shows you some of the peaks and valleys. And yeah, we're definitely at a low here, which is definitely good for affordability and buying real estate. And this is the national averages of lenders, obviously, depending on your credit score, your debt to income ratio, and your loan to value ratio. A bunch of stuff goes into it. So if you go to a lender and you don't get this, there's a lot that goes into it. So if you do want to check that out, I have respectable lenders that I can get you in touch with. Shoot me a text or give me a call or an email. My info's in the description. So moving on to Park City, we are going to be going through these graphs that Rick Klein put together. He's been doing this for years and years and years in Park City. So his takeaway, or the front page, says halfway back to normal. As you can see, a lot of these graphs are getting closer to normal, so which is good, and we'll get into it. So first one on the conversation of mortgage rates. And this is a cool graph overlaying mortgage rates and existing home sales. As you can see in 2020, when mortgage rates dropped and there was a bunch of money printed and money was cheap because of lower interest rates, the demand for houses skyrocketed and there was a bunch of closed sales. And now we're kind of in that hangover from that. As you can see in 2024, we are down quite considerably on the red line, which is the existing home sales, right? While interest rates are high. So affordability definitely got hit, and the amount of velocity, the amount of turnovers on home sales went down considerably. And especially because people got locked in at low rates. So their incentive to sell is not there, because why would you sell if you have a lower payment on your mortgage than what you can do to rent? So that is huge. And all cash buyer trend across the average across the nation is 28%. This is what it's supposed to look like. It is trending higher, but this is what it's supposed to look like. What Park City looks like is a little different. So you can see the average 48%-ish. Right now we're sitting at 60. Last year was 60, or Q1 was 67. So this is quite considerably higher than the national average, and this will definitely explain a lot of the graphs moving forward for sure, because we are definitely a different market than normal. You can see here with vacant land. I mean, vacant land's almost always bought with cash, but you're going to hear me say a lot of the normal market, the like healthy market, which is the 2011, 2012 to 2019 area. As you can see, condos outpaced single family homes in cash sales. I think that was like your normal market where people were buying their second property in Park City, a vacation home with cash, and they're not getting a home, they're getting a condo so they can use it for skiing. And that makes sense where cash would be put, where a single family home, maybe somebody moves here to live here full year round. Maybe they aren't that demographic that's just buying a condo to come here to ski with cash. But what's weird is Q1 and Q2 2024, you can see single family homes are outpacing condo sales for cash. And I have a feeling that's just because the single family homes have got so expensive that you are now in that $4 million range. And those are usually bought with cash anyways. So you're kind of getting out of that attainable level for people that use leverage. And a lot of people that buy with cash, they'll portfolio loan, kind of group their house into all their assets and get a better rate on a bigger chunk of debt. But that's different. That's a different topic for a different time. Anyways, interesting to kind of lay it down on what's being bought with cash here. So, going over the pending sales, right now, the blue is in the national average and Park City is in the red. And right here, this is what I believe is propping up our pending sales is cash, because you can see the national average is plummeting and we are kind of right in line with the average 2011 to 2019. So we're kind of right back in there. And propping up with cash is kind of a weird way to put it. Just because I think of propping up, I think of speculation, and cash is definitely not speculation. That's more like insulating the market. So that's interesting. This this is confusing because now the red is the national average and the blue is Park City, but the same difference where the national average of existing home sales was a lot higher than it is now, and the blue in Park City is a lot closer now as it was between that normal market in the 2011 to 2019 realm. So we're going to get into existing sales, and you can see the difference between condos, single family, and vacant land with the different colors. Condos are blue, single family is red, vacant land is yellow. I guess you'd say yellow. As you can see, during COVID, vacant land 2021, 2022, vacant land was quite considerably more. I mean, everything was more. I would say condos and vacant land really shot up because of the greater Park City area. So I believe that is a lot of hideout in Deer Valley East, kind of coming to fruition. A lot of new construction over there, a lot of open development, selling land, etc. And then a lot of condos being built because there isn't, other than hideout, there isn't too many new single family home developments opening up in the Park City property area. So, but as you can see now, we're getting back to normal, right? That normal area. So that's good to see. And so this kind of shows a little different of a view of the same thing. As you can see, vacant land in green, we are above the average. The single family, we are below the average. And then condos, we are still above the average. And I also do believe that that is because a single family home is almost out of reach of a lot of people. It's getting into that realm where you look at other markets like Jackson Hole, Aspen, and Sun Valley, they're already there. They're already out of the affordable kind of zone for a single family home, right? We're cheap compared to there. So I think that's kind of explains the lack of single family residences sales, just because it is exceeding into that upper 5 million plus zone, demanding existing sales. So volume is up 22% from last year. However, it remains over 100% above the normal years. And this is volume, dollar wise volume, right? So, 2022, so much money got injected into our economy, and everyone was pretty scared of inflation ruining your buying power. So everyone went right into assets, so stocks and real estate. And with real estate interest rates being really low, a lot of people went into real estate. So just like how the Fed is targeting a 2% inflation rate, they don't expect prices to come back down to pre-pandemic levels. They're just looking for a steady growth from where we're at. So if you look at this graph, you mostly would think to get back to normal, we have to get down to that. Is that a billion? The $1 billion. And with the outlook of the Federal Reserve and inflation, we really just need to be staying steady on where we're at and growing at a 2% rate from there. Obviously, fluctuations like last year to this year, and I'm assuming where hopefully we'll be leveling out. And so the total active listings for inventory, like we are saying, 2013 to 2020, that relatively stable normal market is 1,100. We're 22% below that still. So we still need 22% of inventory come on, and more inventory usually equates to lower prices, but we are also looks like we're going to be seeing lower interest rates as inventory comes on. So I think that will battle that and we'll get stable prices as this inventory comes back to normal. So we're almost there. This is definitely the last shoe to drop, as in getting back to normal. But I do believe as interest rates come down, the the inventory comes on, I think prices will stay somewhat stable there. And that's the last thing to get back to normal. Speaking of basically absorption rates, like that's what we're saying here. Like we still have a lower absorption rate because inventory's down. Usually when inventory comes up, the absorption rate gets longer. So talking home prices throughout the United States, quarter 4 price changes by state. So this is the last quarter of 2023 and in the first quarter of 2021. And we are at 5.8 or 5.9. I can't read that too well, but decent enough. You can see like Vermont and New York are coming back pretty heavy, but that's very interesting. So we are up 5% this year, or this quarter, sorry. But this is very interesting. Home prices appreciation pre-COVID. So we are in Utah 52% since pre-COVID. You kind of saw that on a graph, but this is putting it into perspective. Kind of crazy. You saw Florida go up 66%, and then Midwest is around the 40s, yeah, then 30s. And you get like California at 38%, which is definitely crazy. Crazy numbers for sure. So, given everything here, it's a very brief overlook of Park City in general. Once you dive deeper into neighborhoods, that gives you different stories altogether. Park City is definitely not just one market. Each neighborhood is a submarket, And if you want me to dive into those numbers separately, I'd be more than happy to. Just leave a comment. And if this gives you, if you got any value out of this video, please subscribe and like and hit the bell to get notifications for upcoming videos. Thanks, guys. See ya. Let me know if you're looking to buy or sell in Park City. Love to help you out.